U.S. spot Bitcoin ETF options approval could lead to regulatory headache plus more crypto news. Seed Fadilpašić last updated. February 2, 2024 at 3:10 AM GMT+2 3-min read. Source, Delphi. Get your daily, bite-sized digestive blockchain and crypto news, investigating the stories flying under the radar of today's news. In today's Crypto News Roundup edition, U.S. spot Bitcoin ETF options approval may lead to regulatory headache. Animoca brands, Delphi Ventures, Amber Group, and other big players invest in Pixelmon. BlackRock tenfolded Bitcoin mining stocks from $76 million to $775 million. U.S. spot Bitcoin ETF options approval may lead to regulatory headache. It could take months for options on new spot Bitcoin exchange-traded funds ETFs to gain regulatory approval, potentially dampening the appeal of the underlying products, Reuters reported, citing multiple industry sources. The sources explain that options on the Bitcoin ETFs are delayed because there is no established regulatory process for approving them. The U.S. Securities and Exchanges Commission (SEC) typically approves them just days after an ETF starts trading. However, the problem is that regulators view Bitcoin as a commodity, so spot Bitcoin ETF options may also require approval from the Commodity Futures Trading Commission (CFTC). Therefore, spot Bitcoin ETF-related products could raise questions about jurisdiction and oversight. According to Martin Laneweber, digital asset product strategist at Market Vector Indexes, which provides the benchmark for VanEck spot Bitcoin ETF, this dual regulatory engagement adds a layer of complexity and potential for what some might call regulatory headache. Laneweber argued it could take 10 months for the approvals. Meanwhile, analysts have argued that big investors could help drive as much as $100 billion into the ETFs, but that may not happen without the options as they face risk management issues. Yessa Yadav, a law professor at Vanderbilt University, argued that some big investors may stay away altogether. Moreover, the delay prevents the industry from bringing more innovative products to market. The markets really want to go there, but the regulators are the gatekeepers, opined John Roglieri, head of capital markets at ETF. Market maker Falcon X, Animoca brands, Delphi Ventures, Amber Group, and other big players invest in Pixelmon. In the latest crypto news, decentralized Web3 gaming IP Pixelmon has raised a seed investment of $8 million. It will use the funding to continue development across its differentiated portfolio of casual and mid-core games. Per the press release shared with Crypto News, the round saw participation from Animoca brands, Delphi Ventures, Amber Group, Bing Ventures, Bitscale Capital, Cipher Capital, Foresight Ventures, Mechanism Capital, Sfermian, Spartan Labs, Vista Labs, and others. The round also saw participation from a long list of founders, angels, call, and ecosystem partners, it said. These include Ray Chan, founder of 9GAG Inc., Kun Gao, founder of Crunchyroll, Robbie Ferguson, co-founder of Immutable, Gabby Dizon, co-founder of Yield Guild Games YGG, and founders of cryptocurrency exchanges Bitwomi and Talk Crypto and Web3 advisory firm Emphasis. The funding follows the successful launch of Kevin the Adventurer KTA, Pixelmon's first hyper-casual game. Deployed in October 2023 on Coinbase's native Layer 2 base, the side-scroller saw 36,000 active players and 10,100 hours played in its launch month. A second hyper-casual game, Pixel Pals, which features pet and habitat management blended with trading card mechanics, is set to launch on Mantle this first quarter. The team focuses on major releases for the core Pixelmon IP, including a rebuild of its free-to-play desktop title Arena, new Pixelmon abilities, and core game loops targeting a 2024 release. Further, Hunting Grounds, an open-world adventure game with RPG elements and PvP auto-battler tournaments, is set for the open beta in 2024 and a full release in early 2025. Pixelmon plans to grow its decentralized IP across verticals via franchises, sublicenses, and joint ventures. This includes merchandise, trading card games, animated series, comic books, and more. BlackRock tenfolded Bitcoin mining stocks from $76 million to $775 million. The world's largest asset manager BlackRock has not only been answering client demands for its spot Bitcoin ETF but also scooping up mining stocks, according to the latest Miner Weekly report by Blocksbridge Consulting. BlackRock's asset and investment management subsidiaries already increased their stakes in Marathon and Riot in 2023. Per recent SEC filings, says the report, BlackRock subsidiaries bought even more shares of CleanSpark. The company picked up more shares in Riot, Marathon, and CleanSpark by 36%, 100%, and 205%, respectively, the report found. The increase in positions is partially fueling the price rally of Bitcoin mining stocks, it said. Moreover, it has led BlackRock's total holdings in the three mining companies to reach $775 million as of December 31. This is up from $76 million a year ago. One underlying trend, says the report, is the scale of equity dilution among these mining companies. It was used to fund their growth and capital expenditure as the industry learns from the lesson of over-leveraging during the 2021 bull run. Follow us on Google News.